Hello techies, I'm Divya here. On behalf of CyberBrainer, don't you think the world of tech is evolving faster than ever? Now is the perfect time to dive in and build the skills that will take you places. With CyberBrainer, we are putting you in the driver's seat of your own future. We at CyberBrainer don't just teach your interest. We believe that knowledge is power, but it's applied knowledge that truly sets you apart. Whether you're diving into data science, mastering artificial intelligence, or exploring the world of cybersecurity, our courses are designed to give you the skills that matter. So let's jump into the session and make the future yours today. Thank you.
Today we're going to start our configurations on that part. In real time, we may not be participating to create tax part. It completely has to be taken care of by the tax consultant. But this is for an understanding how to create, how to test. The first task is edit company tax details. Let me get one dummy company because we need company data here. This is covered as part of your core, SMIL. Oh, we have company ready. The first task is edit tax. This is the first task in the tax setup aid, company tax details. Here we have to select the company. Which company is the one I created? Why we are setting company? Because we will assign employees to this company. Here the head count is currently 0. We'll assign the head count to this company. All these employees will fasten the tax. That's what all employees in USA group that fasten this tax. Go to the tax ADs. This task also needs to be accessed by the financial companies because they want to capture VAT. But we are not confident with our party. We are configuring for our own tax. I mean payroll related. Select tax ID, go to the add button. For which country you're creating this tax? USA. What is the tax ID type? Federal Employer Identification Number, FEIN, the state taxes, sales tax. Search for FEIN or Employee ID number. Enter the Employee ID number. This unique number has to provide by the IRS. Whatever they provided during start of a business, the same ID, we will map it here. We are going to perform all the transactions on this ID. If any cash inflow, cash outflow, if you're paying any taxes to the employees, they're going to track from this transaction tax ID. And if it is a primary tax ID, you can also search the checkbox. What is primary secondary? Secondary means mergers and acquisitions. I will highlight that point. At this time, it's a primary transaction, primary tax ID, and we are going to use this tax ID in all the government related documents. Simple configuration. First one is for which country we're doing this and what is the tax ID for. Based on the country, automatic values will be available. Example, if you select India, what are the tax IDs in India? Those are available here. ENC and tax identification number. These are all state taxes. Only one country, tax only. We have to map, not both. Normally, this needs to be configured by the company, and this needs to be configured with the financial guys. The first task, we have mapped our FIN number. Now move on to the next task. Federal Edit Company, Federal Tax. Let's configure Federal Tax. The second task is Access Edit Company Federal Tax. Company, we created one. Select that value. This is just for a demo how to call companies and configure. Now, here we have to configure the values. No less configure. Start date. Start date is nothing but, by default, the go live date. Here are two things: supplemental tax method, regular check. Supplemental tax method, separate check. Employee have on cycle, off cycle. We are not mapped anything. That's why it's after a time, supplemental tax method, regular check. Supplemental tax method separation. We have regular wage. We have off-cycle wage by any time, tips, incentives, variable pay, commission bonus. If the customer is giving a separate check for all cycle payments, please select what tax method is going to be adopted. The standard method or flat rate. Similarly, for regular wages, some sector standard withholding means every quarter, every month, and every quarter will pay. For separate check or supplemental wages for separate check, are you going to take a flat rate or aggregate standard? Just want to give an example. In India, if we are receiving any bonus, there will be a flat 30%, flat 30%. If you're receiving a salary, that salary amount will be falls under 0 to 5 lakhs, 5 lakh to 10 lakhs, 10 lakhs to 20, 2 lakhs to 30 and above the 30%. That's what we are saying. For off-cycle payments, would you like to process aggregate standard, which means include the tax along with the regular tax or the off-cycle payment? You are going to deduct a flat rate. That we need to select. Here exempt from FUI Federal Employment Insurance. Does this organization is exempted? Employer and employee no need to contribute any FUI payments. If yes, cycle checkbox is not applicable for all the employers. There are certain employers, means charities, any medical colleges, or any, what do you call it? Child protective organizations. They have some certain exemptions. They no need to pay. If you have exempted auto, and system will allow it to calculate those wages. Third party provides wage too for sick pay. This is applicable only for the employees who is working in New York location. They have mandatory and additional component called wage 2 for sick pay. Is there any third party provides wage 2 for sick pay? If this is same, you have an organization in New York and this is one of the mandatory, hence it's like the checkbox if it's applicable. They will ask you who is the third party insurer, agent name, third party tax ID. If none of them, a company only providing the insurance for the employees who unselect this. It's a company one. There is no third party insurer up to customer card. Move on further. Kind of employer, the customer. What is the customer? Nature of business. Why this question? Because I said certain exemptions, charities, certain universities, colleges or medical colleges with service. Here's certain sections. Federal government, none apply. 51C, non-government, state, local governments. One of the value you need to select. If I implement for private sector, these are public sector. Let's say this is what you call a charity, related sections. None of the problem is a private employer. Does company will provide dependent benefits? This company is going to provide benefits to their employees. If yes, select the checkbox. Allow pre-tax deduction allocation. Allow pre-tax deduction allocation. If you have any pre-tax, you may require to do some deduction allocations like costing allocations. We will say, do you have that concept? If yes, select checkbox. Or all the decisions happen through one of the cost center and select it. Again, customer card. Allow ongoing worker deduction tax allocation. This I'm going to cover here, multiple work times. That high level, let's say, sometimes in USA, you also definitely heard about this, might be worked out. In US, if an employee working 2 different states in one tax year, for example, an employee worked in Colorado State, Denver, he worked location in Denver State is Colorado. For 6 months he worked. And the next 6 months he went to another project, Chicago, Illinois. In 1 year, employee worked in 2 different locations, 2 different states. Then this employee is liable to pay the tax for both the states. Would you like to record those ongoing work deduction tax allocations? Select the checkbox. When you enable this will be available. If you're disabled, if you're not struggling. When it is applicable, when it is not applicable, the employee is not traveling anywhere. Employees are working only in one location. Employees are not around any different states. Then we need to select this. We need to avoid this. Let's select this and then enable ongoing work deduction tax allocation with time tracking. How do you want to track? How do you want to track employees working in different locations to the time tracking? Do you have a time tracking implemented in your organization? Would you like to track to the time tracking? If yes, I'll check the checkbox swipe and swipe whenever you're doing. The locations also will be displayed. Based on that, the tax will be calculated. Enable tax on mapping on location. In position, we will give location information. In position, we will give the location information. From there, the tax needs to be calculated. Work location. And again exclude them for tourist taxes from tax filing. This is for alien non-resident. They will call it as a non-resident alien. An RA, they will say an RA. Exclude taxes from tax filing. By any chance, if any employees can be excluded from the tax filing, select this checkbox. This is not applicable for private sectors. This is applicable for the government sectors or charities. Company name override for year end. Sometimes, for example, this company is called Walmart. At this moment, we are confident it is Walmart. Who knows Walmart can? Of course, it never happened because it's a big company. Definitely. Walmart can do some acquisitions. Can someone, maybe Amazon, buy Walmart? The company name going to be changed. Acquisitions measures. At that time ways to document, we need to display the new company name. As of that day, we have such requirements. Change the name here. What other new company has been acquired? That company name, we will give it here that instead of Walmart, you can. This name will be displayed in the ways to documents. Since company name has been changed, The FEDN number also might be changed. When company is going to be changed, your federal employer identification number also will be changed. Give the I'm sorry. For example, Amazon is acquiring Walmart. I would like to display Amazon in the page to document. Then I also need to give Amazon federal and product identification number here. And here we have a disclaimer. What they already maintain, the disclaimer. Disclaimer in the sense that this is a tax. Anyway, strictly if I will go on and follow the tax rules and regulations before any company would like to configure that. I have to say that if any system error happening, if any calcium properly not happening, we are not going to see any people. There is something like that. If you want to display default disclaimer, you can select, or you can also do custom disclaimer, the kind of a help desk you say, and then electronic wage to filing. There will be an official has been working with this company who is taking care of all that access. That's a you can say vendor, tax vendor. We can also file a chronic ways to filing. We can give his contact or her contact number on which company they are from. You can say auditor. That information can be captured here. Straightforward and simple, as that is a pre-configured data. We checked one check or two checks, exempt or non-exempt. Other options. Move on to the next task. Edit company state tax and local. There is no separate state and local company Walmart. How many states the company is operating? If, for example, Walmart operating in 3 states, California, Colorado, Illinois and Texas, just giving an example, 4 states, 4 times with different states, you need to come. Because each state has making their own taxes. The first thing Walmart state, this state will go to California. Now here state taxes. Add a button start date, some second goal update. And date I'm not specifying because we're not sure when the company will shut. Taxes residence tax and work tax. State withhold residence tax. Employee also may have to pay work tax. And would you like to use the federal employee identification number, or you want to give some employer identification number provided by California? As other option you can choose. State also will give you a number. That's why we have GST in state TN. 2 different TNs we have. We want to give in India central government CSTN or state government ESTN. We want to give. Even if you see how to say. Let's say if you buy something when you took the recipe, you can see now state tax, not federal government. And central government. Would you like to go with that or state one? Let me say I would like to go with the federal. Same concept. Supplemental tax method, single check. Regular standard withholding. Supplemental tax method separation. Flattered, but I got your question. I'll get back to you once again. And this is a new thing has been added even you didn't find in your book. Because of the COVID, people are switching between the states. And now the question is, whenever employee work location will be different. Work location tax will be differently calculated. For example, if you might heard about New York and New Jersey are very near. Employees prefer to stay in New Jersey because the price rents are reasonable. That is nothing but a resident tax. Employees working in New York, there they have to pay work tax. It will be different. That's why the new thing has been added. Please exclude this one. I will also explore and come back on this. Even I'm also, this field is newly added in work. Work from reciprocity. Simple and straightforward. If you see here what it doesn't or does not ask you enter the tax percentage because each one has their own card. Own percentages. Workday is authorized to update. We are not. See, the spare component of our Workday is already created. Workday won't. They will maintain certain percentages on this calculation. But we don't have any control to view Nazi. We can't edit or modify. They will all keep on. I mean, we scroll down. Let's call the state unemployment insurance. Is not my employer needs to be contributed here. Up to but employees. We are not giving end date. Will it automatically take or whenever we are going to change? Then we are not doing that because until the company, we don't know. When is the end date of that company? We don't know where is. The company will be shut down. There is no specific end. At least there should be some end date after that. We can't deal in it like how we will do in a CP system. No, this functionality is, I started a new entity and I have planned to shut. I have approximately, I will run the business. 22. I will give my end date is 2024. At this moment, we never know when we will bankrupt. When the company will go bankrupt or close. That's why we'll always look it back. When an assess scenario comes, we'll update the end date here from there. It doesn't calculate for any taxes. There won't be any logic for them that only based on the start date it will take. If we give the end date, then it will stop. Assular. Again, use state or federal. The NN is exempt from this UI. If the employer doesn't know, need to pay the checkbox. But no, this is not applicable for regular private groups. Use employer tax overweight. Now see here, assume the system already maintaining, let's say, a 4% or 3% unemployment insurance state on implementation is 4%. If you would like to override the employee rate to pay a few more dollars, let's say 5 years to pay, you can give 5 here. System in California, the UI is 4% but employee in 1% extra to the employees. If you want to override, you can give the number, or if you want to go by default by state government, what are the percentage they're giving and select it. System automatically calculates that. This also, sorry. Understood. And this one again, I can come back to you. As I said, I never involved in the calculations. These are all state additional taxes. Each states they have their own additional taxes. We will call it as other taxes. This is called FUI, Employer Credit Reduction. Again, this is to sorry this one. Please hold on, I will explain. Maybe it's required confidence. I'll try to recollect. This is different regulations each state has originally. They have some certain taxes. You'll call it as additional tax, disability tax, etc. California, it's a disability taxes, voluntary plan assessment taxes, etc. This has to be decided by the customer. What are the taxes they want? What dollar to define all the taxes? Just you have to give what taxes will be employed and detected. That's all on this page, but this I will check and come back with FUI employer. And on the same screen, if you go to the local, this is called city withholding tax. By default in California, which is that Tier 1 city is San Francisco. City tax or local tax authority, SF San Francisco, everything is available. Just we need to select the values. Use FTI number. That's all. How it works. If any employee working in the San Francisco and in California, this tax is applicable by default. From where the value is looking, employee position. In employee position, I hope you might remember, in employee when you're creating a position in HCM, we will define a location, work location from there. Looking to that. And then employee self-service forms. State taxes, when they're paying local taxes, when they're paying or if there are exemptions required, we have certain documents. What are all documents? Enable all the forms. Employees can download all the required forms. And whenever they're filing or downloading a document, if there is any point, not issues or others, it's like, then they will say, yes, we know, or there might be some issues, is a kind of a disclaimer. To make it simple, if you remember if you join any company, when we get the Providence Fund, there are certain documents, PF transfers, PF, what do you call claims similar to that? Each state, they do have the second document proofs there. If you're looking for only particular documents, you can select those documents. It will be available here or are delivered. Or you can allow the employees to download all the documents. Now the next point is tax selection for workers. Once you set up the taxes, we need to assign these taxes to each employee. Whenever hiring an employee, we will trigger a P called tax selections, and certain taxes, based on how we are configured, will be defaulted. But let me show how it works. One of the most, at least we should know what data we need from the customer in order to maintain taxes. Maintain taxes go to the payroll. The tax selections effective from 1 to 22. Currently work state is California. Home state also California. Distance tax. Work taxes from California is calculated from California, where these values are coming in. If you go to his position, location is SO. San Francisco is part of California, from where this location is coming in from the position. Like that will be fun. Now let's go back and assign the taxes. I do this tax collections. Just the dates. For now only California. Additional taxes for multiple work type predictions. If an employee works more than one state. These are the current directions. Let's talk about all these. Select the add rule first. Federal, state, local tax allocations mappings. Add rule. Is this employee is married or single or separated? Key options. Here, why these details are required is the federal government wants to know is this employee is this submitting taxes separately or along with the spouse is separate. He or she submitting the tax. I'm selecting married or single or married filing separately or married filing jointly. One of them or head of the household, which means spouse is not working separately. He's submitting, he or she. Number of allowances is nothing but dependents. Certifications. We will say number of dependents. Why do we need number of dependents? Because you can request for tax exemption. Then extra withholding. For sometimes an employee can prepay the taxes. For example, let's say my compensation is 10 lakhs. And on an average, I require to pay 2 lakhs as a tax per annum. Every month, my company is holding around 12,000 rupees per annum. Let's say 10,000 rupees from my salary. Now what I told, instead of your directing from my salary every month, let me pay the total tax. Kind of prepared, I will prepare that total tax to you. You will give the full salary to me. Of course, this is not this. An offer in India will applicable, but you have an option like that within USA. You can pay the tax in lump sum, take the full salary. If that is the case, you can just put what are the extra withholding you have paid to your organization. That information will define here. Multiple jobs or spouse works in India. We are to work only one job. That's how the agreement jobs and we will do. But that country, an employee can work more than one job at the same time. It's a flag. Something like to know the employee is working only one job or more than one job. Employee is also working or not. This is the flag federal government. Have an idea how much he is earning from each job. Total number of dependent. How much you're spending approximately for your dependents. Because whenever you're exempting for education or loans, they will calculate total how much you are spending from your wages on your dependents. Is there any other income? You have rentals, please, or any business? You have any other income? How much it is that will maintain here? Employee. Is there any apart from the tax deductions? Do you have any other deductions? We have any other directions. What is those directions? A total how much is deducting? Let's say paying loan amount, loan repayment, salary advance payments, health related. We can define the deductions here. Are you a non-residential alien? I said enroll A, you select the checkbox. Are you exempted? If you enable a checkbox, then only it will be available to select. If you're a non-resident alien, select this. It means you are not a US citizen. Then exempt from NRA additional amount. There's a minimal taxes for NRA. Are you exempt from the term out? Are you exempt from the term out? If yes, we will select the checkbox. In which scenarios people are exempted any disabilities or a percentage of physical disability. At that scenario, or you are joined as a doctor, you are joined as the research associate. You might be exempt from NRA additional amount because you're providing services to the country. And then lock-in letter. This is an interesting and important one. In India. An example in India. First, whenever the tax year will start, April. Let's say March is done, April is started. All our companies will submit your, what do you call? We'll ask this much you are paying house rent allowance tax declaration. Tax declaration we will provide. I will say I have this independent and I have tuition fees. I'm paying. I bought a two-wheeler, which is an electric one. I need subsidy and I'm paying insurances. I have medical use for my dependents, etc., etc., etc. I will tell that I'll get less. I'm not showing the proof. They may deduct my entire salary. And that is what are the tax have been calculated. Now similarly lock-in letter, the same concept work. Not Workday in India. Also we have a concept called new tax resume. Two things, new tax, old tax, new tax resume. What new tax resume says, you say honestly whatever paying based on that, we will deduct. You no need to submit any tax submissions at the year end. But once you opted for tax regime, you cannot change the tax regime for this current year. Similar to that, lock-in letter means what are the proofs you have submitted. You are no longer allowed to change in mid of the year. That amount is going to be calculated to your end. If you're opting exempt by any chance you are exempt because of disabilities or other reasons from the federal government, select this. No wakes. I'm going to. Some employees may want long leaves, sabbatical leaves, 6 months, 1 year. You don't have any salary. You no need to pay any tax or an employee made. Now here, unemployment insurance is straightforward. All are pretty different. As I said, you'll select the employer row. If you're authorized FET election, Federal Employment Tax Authority election, you can just select. Or if any chance, if you're exempt with some reasons, you can select exempt from this tax. Similarly, FSCA Federal Insurance Contribution Act, Medicare and OSDI, as we discussed. If you see here, we no need to select any percentages nor values. Workday as in. Yes, not to position. Position will be removed. Now, can anyone help me? Why we have position here? That should be calculated on the worker. Why on position? Because sometimes an employee may hold two positions. In that case, which position want to calculate tax? That's why we have this option. When you start to apply to worker, which means he's holding only one position, we don't need any position detail. Again, if this employee is exempt from this tax from the Medicare select. If yes, what is the reason? Provide a valid reason. These are also available. What category rules, etc. And similarly older, say deposit insurance apply to worker, not to position. Is this employee exempted? If yes, what is the reason? And this is about federal. Now let's move on to the state tab as well. State. In the state tax, California withholding. Employee work location from this state has been fetched. And again, same thing. Is this employee married or single? Profiling jointly. Married single. You can set the value, number of dependents. You can also see the help text from Workday just over the cursor. All events are nothing. All events are. Certificates are nothing but dependents. Estimated directions. Approximately 40, the estimated direction for the current year. Additional amount. If there is an amount, your incoming amount, apart from salary walking up, remains standard tax. The new tax resumes something like that. Once you say the locking letter, Workday doesn't let you allow to change. Not only Workday, that's why ERP are set up. No ERP will let you allow to change and exempt by any chance of the employees exempt from the California. And with pulling state taxes, check the checkbox. MSR means military services. Military spouse residency. If any of the colleagues or any of the members in the family, or are they one of the spouse, is a military services, they will have to get some benefits exemptions. And if you're on long leave due to sabbatical or any other long-term disabilities, no salary, no tax. Similarly, this is also unemployment insurance FUTA. It is CTA state unemployment tax severity. If simply you have only one option exempt or non-exempt. But if you notice any value, here we are not seeing what are the percentage tax will be calculated because those values are maintained by Workday. And other taxes are nothing but additional taxes. It is not constant for all the states. It will differ to each state. Customers will provide what additional taxes they would like. Calculating those values we can give it here. And this is local or city tax. It's California. If any employee working in a civil employee may require to pay the local or city tax, these details also, I'm not aware. I'll say tax and never call configure all tested. But I'll explore and come back to you on this. But one thing, if any employee joining in mid or mid-year, we will call it as media tax adjustments. Those deals will, but at the full details I'll come up with in the next session on this. On this local time and tax allocations means if an employee works more than one state in one tax year, employee is liable to pay that tax in both the states. That will record here. There are button. Let's say I said which are dead. Not a problem in California. He worked in a state, less city, let's say some passes. It's still slow here. Looks like it's just a second. He will assign the percentage person in the sense. Let's say 6 per 6 months. The employee walked in San Francisco 6 months. Employee walked in Chicago. Will record the percentage 50%. He worked in 50%. He walked in San Francisco, which means 6 months. He walked in San Francisco and again add one more row. Just in the future. Let's say from July she's going to work in Chicago. If you have a time tracking, Workday has the ability to calculate exactly and default the values. State will be 10, please do. Then the state city will be Chicago. And let's say 6 months. He walked in Chicago. Will give 50%. The one point we have to remember here is One point we have to remember here is make sure that both should be 100% and more than one. Whatever 3 or 4 states you're working, but all together should be 100%. It cannot be more than 100 or less than 100. That we can calculate certain multiple work time taxes on this. 50%. It goes to the Illinois because you have 6 months. 6 months of tax will go to the California. Any questions for here? And federal, state, local configurations are. What are the fields we discussed? How do you know what percent each one is? Good one. If you want to track automated way, we must have a time tracking system. If you don't have, then this is all we have to calculate the total number of working days by employee, in which how many days the employee has worked. Based on that, we'll arrive at some presentation. For example, let's say 365 days, we have excluding Saturday and Sunday 260 days. Somewhere around 260 days. Let's say out of 260 days, 100 days he or she worked in Chicago, 160 days they have worked in Denver, Colorado. Divided by 30. 100 divided by 30, 3 months, 10 days somewhere. We'll calculate 40%. The employee has worked in the state. There is no particular logic and calculation until you have really a valid time tracking tool. Constantly have to change this. We have to change this value based on the work, but I will also find if there's any formula exists for that. The system still holding better. Let's hold here. There are the topics only we discussed. Again, I will explain. I've got tax percentages, few things I put on hold, since I also have to review ways to document generation and also 401k benefit detection configuration and worry of 401k limits and plan configuration. I will pick up in tomorrow's session. Thank you much. Please take care. Please do like, share and subscribe to our channel.